Hey everybody, it's John King with Summit Funding, and I want to give you a quick update on some recent news that happened with the federal government, specifically related to Fannie Mae and Freddie Mac. So basically 2-3 weeks ago, the head of the FHFA, which oversees Fannie Mae and Freddie Mac, was fired. And there's a whole backstory. I won't get into the backstory, but the bottom line is that the new head of the FHFA was appointed by Biden and is much more housing friendly. And we expect that that is going to be helping to remove some of the restrictions and some of the additional fees that was added by the previous administration. Now, I'm not getting political here. I'm not talking about what I think should or shouldn't happen. The fact of the matter is that each administration has its own policies, and all I'm talking about here is fact about what the current administration and the prior administration looked at when it came to housing. The current presidential administration is very, very pro-housing. So the new director of the FHFA, the first thing that they did of major consequence actually came out yesterday on the 16th, and that is that they removed the additional fee that was added last summer for everybody refinancing a mortgage. What does that fee mean? It was a 0.5% fee that was added to the cost of a loan. It was not an additional interest rate, and therefore rates did not just drop by 0.5% for refinancing, but it did decrease what the cost of getting a loan was. So you heard the term points. 1 point is 1% of your loan amount. It's a 0.5 point or a 0.5% of your loan amount. So somebody borrowing $400,000 on a loan that was conventional backed by Fannie Mae or Freddie Mac had this $2,000 fee built into it since last summer. And that fee just was eliminated yesterday. And that is a huge savings for people who are refinancing mortgages. That's the good news. Here's the other side of the story. I think that we are going to see more relaxation of guidelines as they're looking to promote homeownership, but I'm a little bit concerned because if we go back to the last housing cycle where we had a huge promotion of homeownership, it was the Bush administration back in 2002, George W. Bush, that had really started pushing homeownership. And the idea was to get as many people as possible to become homeowners, which in theory is great. Because with homeownership comes stability of housing expense, comes wealth building. You're paying your own mortgage down instead of somebody else's. There are all good reasons why people should be homeowners. But when you start getting to a certain point of saturation where there are a certain percentage of people that are homeowners and you say, I want to get that higher, you start pushing people into homeownership that maybe aren't ready for it. Maybe don't have the means to deal with challenges that come with homeownership. It's not all roses. There are some challenges with homeownership, and it basically created or led to the significant rise in housing prices back in 2002 to 2007, simply because they made it easier for more people to purchase homes. Here's why I bring that up as a concern. I think we're going to continue to see pro-housing, pro-home ownership policies from this administration. We're going to likely see the removal of the limits on how many investment properties that a lender can originate, which has recently, in the last 6 months, significantly driven up the cost on and the interest rate on investment property loans. So there's some good things here that are going to happen. It's going to drive more people to want to buy homes. It's going to drive housing prices up significantly higher. But at a certain point, we're going to get to the level of saturation where everybody that has the means to buy a home has bought a home. But if the administration pushes it a little bit too far, they're going to start pulling out other tools, some unsafe tools that we might have seen 20 years ago that will continue to improve the numbers of home ownership, but at what cost? That's what I'm concerned about long term. I think this is absolutely going to mean even more pressure on housing prices to continue going up because we have a huge number of people who household creation. The number of households that are created, and a household really is, people getting married, people not physically a house built. I'm talking about the family units. There's a statistic that talks about household creation, and household creation has been going up significantly, but the number of homes available has not. Construction has significantly slowed in the last 10 years, and that's a big shortage we're dealing with in housing. That shortage, along with the pro-housing policies we're going to see, are going to continue to push people into the housing market. So if you or someone you know are on the fence about whether now is a good time to buy, given the fact that prices have gone up pretty significantly, especially in the last 6 months, now is a really good time to buy, because we're going to see these dynamics leading to prices going up even further as we move forward through this administration. Thanks for listening. Hope you have an amazing weekend, and talk to you soon.